right, guys. So before we get into any videos today, I thought I would just bring this to your attention. We posted it up on our Twitter feed, but we're doing a little, Halloween weekend, little TDU special here. So for anyone interested in perhaps the membership, joining us here, if you're interested in the belt program, any of the training or things that we do here, there was an opportunity to save yourself some dough. 31% off of all the memberships. Now this is. We're keeping this to new and or members or would-be returning members. All right, so you will have to use, if you go to our website, just tradedevils.com, when you're checking out, it'll ask you for a coupon code, and you need to put it in exactly this way, is boo with the exclamation point. All right, so just something to keep in mind, just a little something. We'll do that through Sunday at midnight. So for any of you interested, just thought I'd bring that to your attention. All right, with that, let's get into the charts. Okay, guys, so we'll finish up here with a look at the S&P as we are putting in new all-time highs here. Now, there's no question this is a tricky count. For any Elliottician is going to struggle here. You're really making your best guesstimate here, and this is just the kind of circumstance where likely 10 Elliotticians are going to give you different counts here. So I'll give you my thinking based on what I see here. It's definitely, this is... so part of the factor here is, we have so much central bank intervention. Is the market really free to move as it would without that? Or, I don't know if that's ultimately makes a difference, right? Up or down, you got to make a decision and calculate the risk reward and just trade it best that you can and acknowledge that that's going on in the background. So the assumption has been all the way out to a weekly that we've got our big 3 here. We get a shallow 4 and that we're in the 5th. Now it's very unclear here. It's very challenging for an Elliottician to get a high degree of confidence as to what we have. Part of the problem is the depth of the retracement here. So I am trading this as though we've got a shallow 2. So this from the low here, I think the impulse is... I think this is all connected here. So this whole section here is one completed impulse. Now it's tempting to think 4 here into 5 because of where the retracement here is. But I think you're disconnecting too much to call this 4-5. And then additionally, if you try and work through the subdivision here, if you're putting the 3 here to get a clean impulse in there. I'm out here on a daily. It's actually quite tricky, even if you're down to the lower time frames. I just think this plays better to go 1-2. Now, what I do think here, and this is my best guesstimate on this, that we've got a running flat here. So the ABC here gives us our A. We get the expanded B wave, and we come down for the C here. So in checking that, you'd want to be looking for the guidelines here of that B wave here. So if I go to... Well, here's the 1272, the length of the A as I'm labeling it here. So we're right to the edge of where you might anticipate that. And then again, just looking for more confluence down here. If I look here, get it right on there. So here's our 100, length of the A projected from the expanded B gets me, it's within a couple of ticks of the 100. So do I love it? No, but if I got to label it with something, I'm more inclined to go 1-2. So I think we've got 1-2. Incredibly shallow 2. Again, central bank fueled, and that we are now just in the process of going into. So if this is 1-2, it looks like we're in a diagonal. So that would imply that we are in the one wave of the one wave of the third wave of the 5th wave. So if this is the 4 and in our 5th, this is 1-2, and we've got a diagonal, well, it can't be the 3. So it looks like we're going to have, so all of this implies substantially higher prices. So duly noted there. Now there is this very nice set of median lines here. Let me clean this up a little bit. So using the pivots here of the flat, if I work the median lines in here, I get a perfect tag of the median line off of that here. So with the corner here, so it's deep. Now it's not golden. We get this right on here. Let's go back to our measure move here. So we get through the 786 here, but we do get the pivot, and then once the pivot's in, once we get it, right, it's 80% that we get there, and we do to the tick. Down for the 2 as I'm counting it. So let me clean this up a little bit so we can get a better look in here. Oh, so if this, see, this is what's making this very tricky here. So if this is ABC into the very shallow 2, and we've got another ABC here, well, process of elimination, it's just leaving me with the ABC of a 1 implying the diagonal. So part of what's causing me to lean that direction is how deep we go here, because you might have thought 1, 2, 3, 4, maybe, right? But the depth here is more typical of a 2 than a 4. Slight break of the golden zone. Wouldn't disqualify it as a 2. But then given that we do break that, you got a couple of targets here. So since we're in a diagonal now, I'd go from the start of the 1 here through that pivot from the 2. All right, so minimum requirement would be 100, but more common in a diagonal would be the 1, 2, 7, 2, 1, 3, 8 window, which would just have us, tagging the median line yet again. So you can kind of see how the whole thing could start to come together. Now, requirement would be not optional. If this is correctly labeled and is going to play as our 1, we have to overlap that here, right, per the diagonal. So we'd be anticipating the depth of that, and then get, do we have enough legs to get up here? Maybe, right? Get this up here. So that would be, now that would not be. So if this is 1, 2, it can't be the 3. Right? So let me make this a degree higher so we get clear on that. Let's go, there we go. Okay, so this can only be the 1 wave of that third. 2, let's go 3, 4, 5 here, and let's get that. Oh, we'll go micro here. Now let's go up 1. Go submit. Okay, so let's go here. That's our candidate here just for the 1, then the 2. So all of this very, very bullish. Here, let's get this. We'll go back to white. Okay, so all of this suggesting substantially higher prices, right? I know it starts to, really? You start to question, right? But again, right, as long as there's easy money and the Fed's now got a new QE underway, and it's just game on, right? It's risk on, right? So we're putting in new all-time highs right here. So as bizarre as this count is, right, trying to work through the rules and guidelines best you can here, we don't have anything perfect. But you certainly, do you want to fight the trend here? It's tempting to think, God, it can't go any further. How can it go any further? Right? It's just they keep fueling it with easy money. So there's no reason to fight this trend at the moment. So until we see it would require something really substantial to really change what's happening here. And this is already kind of an ugly, you're making the best of what you've got here to work with. It hasn't been terribly technical, which is at least out here on this time frame, right? Out on the daily. Now, right, we go down to the lower time frames, and certainly you're going to find technical swings. But out here, it's been a little bit, so you're suspect out here of some of these pivots. I would feel better. So I don't like the idea of buying an all-time high. It's just me, or it's part of my nature. I want to buy it on sale, not at full retail. But if we get up here and this is realized, if we're just going to continue to grind higher here and we tag that median line, now that would not be a sell for me. Again, I'm not looking for sells here. But if we got the retrace into the wave 4 here, and we had, now note here how nice this structure sets up, right? So we're using all of this here. We need that slight overlap. A tick would do it, but we got to overlap just a bit to get that 4 in. Now the 4 to the 5, that I think is very viable, right? On the assumption that all we're doing is putting in the 1, 2, right? I know it's hard to get your head around the idea that we could just be in the 1 of the third here relative to this being the 4. But right now, barring any sort of a significant change in trend or some event that causes this to really make a deeper retracement, really you'd have to take out this pivot here to really get bearish. Just every retrace, every single one has been a buying opportunity. Right, I mean, look. Let's just look at it this way. Look at the number of V bottoms we do here. So look here, V bottom. Right, got that. Okay, so then we do it again. Right here, we get the expanded. Right, then we do it again. Right, there's another V. Now, is this another V going in here? Right, another one. Right, just every retrace, very short-lived. They don't last long, and they are quickly absorbed. Right, buyers jump all over it. Smart money takes it up. Right, we're out here, analysts technicians are going, it can't go any higher. Yeah, it continues to go, right? So why fight that trend? There's no reason to it. Look at the Vegas wave here, catching all of this as well, right? So you want to keep it simple. Above the Vegas wave, you're a bull. I mean, you've got where there's no resistance up here, so there's nothing to keep it from continuing up, right? Nothing, zero. This can just keep going, and as long as the Fed's going to stay friendly to the market, I wouldn't fight that trend. Why make a hero play? Why are you trying to fight? Now what are we going into 11-year bull? Wait. If this starts to turn, there will be plenty of opportunity to get on the short side. But until that time, there is no reason to do anything but see every dip. As I just went you through, every single one of these retracements has been a buy opportunity. So until that changes, it's buy the fucking dip, right? There you go. All right, guys. There you go. Have a good weekend.